our fair value gap. And you can see the impulsive move to the down for the upside from this zone. So guys, as I promised before now, I promised that I will do another video to further explain the demand zone and the supply zone, right? So what is our typical supply zone and the demand zone? The demand zone is that area on the chart where price dropped, you understand, where price dropped, then moved up strongly, you understand. Then a supply zone is an area on the chart where price rose, then dropped sharply, right? So let's go further and know what actually makes up this demand zone, what qualifies a demand zone, or what makes a demand zone valid or a supply zone valid. There are three things that you must find, or two key things, yes, three things that you must find on a demand zone before you tag it as your demand zone or supply zone. Number one, you want to see price falling to this demand zone, then price move up, not just a random move up, a sharp move up to the upside with impulsive candles. Then number three thing that you must put into consideration, this zone, the candlestick that move from this zone should have a fair value gap. So these are the things that makes up a great demand zone. And we are expecting that when the price is coming down to this zone again, it is going to move up aggressively to the upside again. So these are the things that you should keep in mind when drawing your supply zone or demand zone. For the supply zone, the story or the narrative is still the same. You want to see the price move up aggressively, then a sharp fall to the downside with impulsive candle and equally what with a fair value gap, right? A fair value gap. So this fair value gap shows that there's an impulsive movement, there is an imbalance showing that this place is a strong zone. So whenever price return to this zone again, you are expecting that okay, price will definitely fall to the downside, even further to break this previous structure. So this is how to do it in a logical sense. You are not doing trend line, volume, nothing. You are just using mechanical price action to trade the market, right? So let's go to the practical aspect now. Let me show you on the chart so that you can see that this thing actually works. Let me load this chart again for you guys. So this is a Euro USD chart, for example, right? This is a Euro USD chart, for example. So in this place, here is our demand zone. This is our demand zone right here. We'll mark the last candle. You understand? The last candle, the last bullish candle, right? So what you see from here, this place is our demand zone because the price move from this zone with an impulsive candle. You can see a fair value gap right here. This is a fair value gap. The gap between this first candles wick and the third candle does not match, though they does not overlap. So that makes it automatically our fair value gap. And you can see the impulsive move to the down for the upside from this zone. So once we mark this zone, the moment price return to this zone, let me delete all this analysis. The moment price return to this zone again, after taking out this pocket of liquidities here, liquidity, you can see all this liquidity. These are liquidity that price takes out, right? These are liquidity and these are liquidity. So when the price takes out this liquidity and touch this zone again, what do you see? Boom to the upside aggressively. So this is how to do this thing in a logical sense, right? So if we go and show you, let's say, let's find another supply zone. This is demand zone example, right? Let me find another supply zone. Supply zone. Okay, here we are, guys. This is another supply zone, right? So This is a typical supply zone. Let me find a refined one so that it will make sense to all of us, right? Okay, look at this place. What do you see? A very nice supply zone. So this is a very nice supply zone. The moment price touches this place, you can see the last bearish candle that for. I like some people like to mark the last bullish candle, but sometimes I like prefer marking the last bearish candle before the sharp drops, and it all works. You understand? Sometimes your candlestick can be a clusters of candlestick. I will explain this thing in a further way. There are other advanced concepts that needs to be put in place before you can mark your demand zone. Your demand zone is not just a a first candle or the last bullish candle that forms, or the last bearish candle that forms. There are other scenarios where you can use a cluster of candles together as your supply zone or your demand zone. But for now, let us focus on marking the a basic one, right? So that you understand the concept. So here you can see this is the supply zone marked out effectively. When the price return to this zone, because this zone is a strong zone, it has the fair value gap, it has the sharp drop. So once the price returned to this zone again, what do you see? The price started falling. Even when it tried to return back, it couldn't make it, started falling again. So guys, this is how to trade it. And if you want to learn more from me, you can join my academy with the link below. Thank you.